This is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is 3 segments, all under one advisory. So I'm putting out trades in futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that spotlights 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, September 12th, 2022. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. I've got 3 charts for us today. Let's jump right in. This is the December 2022 gold contract, and there's a huge support level that I drew off here, about that 1700 price level. You can see we had lows going back to February, March of 21, again in August. And then as of recently, and actually this is a new 12-month contract low. Let me get that price for you. That was made on the 21st of July, 1696.1. We had a big rally and a pullback. Now we're starting to rally again. Almost could be a small 1, 2, 3 formation, or a very small double bottom. Although you'd love to see more space in between. You know, maybe like in here and in here as a double bottom. So I drew off 2 trend lines up above. And I'm looking for a close above both these trend lines to get long this market. You see the trend is shifting bullish, though it's not quite there yet. The momentum is actually strong to the upside. Same with the turning point indicator here above the midway point. So, you know, ideally a little bit of a pullback and then the breakout. There's also a 20-day and a 50-day moving average crossing over right here, 1748 even and 1759.1. So a close above those moving averages as well is bullish. The 20-day flipping over the 50-day is bullish. A lot of bullish factors going in here, but we do want confirmation. And most likely we'll look at this from an option standpoint, whether it's a straight out call or a bull call spread, just because of how volatile gold can be, the risk involved with futures and the margin requirement to trade a contract. Though there are a mini and a micro. If you are interested, there's plenty of volume in those contracts. But the close above this trend line, I will put out a bull call spread or a call spread, something with options most likely in this market, just above 1820 as a potential target. That's this high, which, let me get that price for you, was 1824.6 from August 10th. And then you can go back and you can see the support and resistance of this line. So I think that's going to be a resistance level now as we head up there, though a breakout of there would trigger additional entries to the upside. So December 22 gold, keep an eye on this chart, could have the breakout this week. Okay, second chart today is the December 2022 Chicago wheat. Bringing this chart back onto the video, still have this channel formation, this orange rectangle here. We did have some recent activity where we took out some of these recent highs, but you can see on this bar here, big rally and then the pullback. Sell off the next day, rally the next day, doesn't take out that high, and then a pullback again today. So I adjusted higher. I just want to be sure that we are heading higher. The trend is bullish, but looks a little, neutral. You can see from the momentum indicator, it's a little flat. The top of the range, same with the turning point indicator, flat near the top of the range. So ideally look for a pullback back to the center of the channel. You can see this 20-day moving average at 811 3/4, 50-day moving average 817 3/8. So looking for the market to get back into here, have the momentum, the turning point indicator down, and then start to everything hook back up, maybe a stronger trend, and then we can get long on the breakout of this channel. Stop losses we would go below these recent lows and this 20-day moving average. This 12-month contract low now is too far away for a potential stop loss. And then the target, probably looking to get back into this range here. It's about 1050 and 3/4. And that's going to be a potential target for this chart if we get that breakout of this channel formation. Moving along to the third chart for today, this is the January 2023 feeder cattle contract. And what I have here is a head and shoulders formation. So the head is the 12-month contract high. that was made on the 18th of August, 191.50. The left shoulder was this pivot point high that was made on the 22nd of July, 188.92 half. And then this recent high here makes up the right shoulder, 188.25 from September 6th. So what we're looking for is a breakout to the downside below the neckline of the formation. And, I could probably draw a third one here that cuts across, this low through these lows here, but these are a little bit more succinct trend lines with more touches. So it's fine. A break of this trend line does the same. Not just a break. We're looking for a close below this trend line to sell this contract. You can see the trend is starting to turn down. The momentum is starting to build to the downside, and the turning point indicator just crossed over the 50. So if we get a close today or tomorrow, we'll be ready to jump on this contract to the downside. The 20-day moving average angling down 187.42.4. And that potentially is converging on a 50-day moving average, 186.52.9. That's a bearish signal here. Stop losses would go above these highs here. And a potential downside target, I like to look at this 200-day moving average. There's also an 89-day moving average right here, about 182. Let's say 182.449 and 182.111. So that would be a potential target, short-term target. Otherwise, there's a lot of space on this chart, so we can just trail that stop loss lower and see how low we can take this contract down. This is the January 2023 feeder cattle. Here's a look at the trade spotlight. It's an email service, so directly to your inbox. You get a write-up of the trade, links to view beyond the spotlight or the chart that you can pop open, precise entry and exit orders, and you're very welcome to tweak those to fit your trading style. And then, of course, any important information like margin requirements. You can go to danielstrading.com, click on the advisories tab, then under technical analysis, you'll find Trade Spotlight where you can read more. Click on recent posts and subscribe. It's free service to anyone at this moment. Feel free to reach out to me if you have any questions about the charts I covered today, the markets in general, or our firm, or just trading in general. Feel free to reach out. My local number, cell number that you can also text or toll free, and an email address. Thank you for taking the time to watch and listen, and happy trading.